Welcome to this edition of the Rayner Report. Always fun to be with all of you as I share with you for about a 10-minute period on video, usually at TomRayner.com. It's either a podcast, Rayner on Leadership, or Revitalize and Replan, or the blog, TomRayner.com. But every other week we're sharing with you a video on critical issues in the local church. These particular critical issues are those that are coming to us from churches around the nation, around North America, and even around the world. So this is not some type of theoretical issue where we're pulling them just randomly from the sky and saying we think this is important. This is what we're hearing. We are in continuous feedback loops. Now, the feedback loop that I'm going to be sharing with you in this particular episode is 6 major tax mistakes ministers make. Okay. Take just a moment and yawn. I know, taxes, numbers, I get all that. It can be extremely boring, but hear me well, it can be extremely important. And hear me well, it can be a bit dicey if you don't do things correctly. The IRS and other state taxing authorities may not like some of these mistakes that you make. So if you are a minister, ordained, non-ordained, if you are a layperson who wants to make sure that your minister or pastor's finances are done right, please hang on because we will go over 6 major tax mistakes that ministers make. The first one is this. I think this is the most common. I hear this again and again at churchanswers.com where we're there 24/7 to respond to people as they ask questions. And it is this. They take an automobile allowance. Hear me. That's not legal. You're not supposed to take an automobile allowance. In the IRS code and the reimbursement that you're supposed to get, there is no such thing as an automobile allowance. Now, how does the automobile allowance work? Of course, it's incorrect, first of all. But a pastor, for example, will say, well, I'm going to estimate that I'm going to use my car this much for business use, and so I'm going to tell the church that I need an allowance, and maybe they'll deduct it from my pay of $1,000 a month, $12,000 a year. Whether that's high or low is not really relevant. But here's what happens. If the church starts paying that as an allowance and the minister treats it as an allowance instead of income, it is taxable income that has not been reported. You don't take allowances. How does automobile expenses work for the pastor? The pastor or other minister keeps records of his or her automobile expenses, usually mileage, and they report it to the church and the church reimburses. It is a tax, it is an expense reimbursement. It is not an allowance. So if you have anywhere on your budgets or anything that would indicate that there's a car allowance, go on and change the nomenclature. Even if you're doing it correctly, but you're calling it allowance, don't call it an allowance. Call it an automobile expense reimbursement. That's the key mistake that I'm hearing from pastors and other staff persons again and again. They are taking an automobile allowance, okay? Number 2, they fail to take full advantage of their housing allowance. This can work both ways. You can take too much housing allowance, and then all of a sudden you're in trouble with the IRS because you have some taxable income that you should have reported. I'm not going to get into that, but let's look at the test for housing allowance. You've got 3 tests, okay? Test number 1 are the actual expenses that you have for your home. If you're eligible for a housing allowance, the actual expenses. And by the way, that includes a lot of things like cleaning supplies and furniture and things that equip the home. It's not just a mortgage or a rent payment. You can read all about this, but it can be a pretty expansive list. So number 1 is the actual expenses. Number 2 is the declared amount by the church. The church has to declare, usually on an annual basis, what the minister's housing allowance is. And number 3 is the fair market rental value of your home. It is the lower of those 3. Usually the one that brings the most confusion, rightly so, is fair market rental value. What is rental value? Well, it's not just the rental value of the house unfurnished. It's the rental value of the home and all the furnishings. And that's where it gets a little bit tricky. Do you do a fair market rental value of each piece of furniture? Do you treat it like a furnished apartment? How do you do that? And even the IRS has not come down with specific rulings. But look at those three. It is the minimum, the lowest of actual expenses, housing allowance, or fair market rental value. Hear me on this. Housing allowance are non-reportable income. They may be reported as a footnote. They may be reported in a little box as just a memo, but it is non-reportable income. So if you have $10,000 in housing allowances in a year and you have a $50,000 salary, all of a sudden you have $40,000 in taxable income. The other 10 is non-reportable. Many ministers don't really understand this at all, and they fail to take advantage of housing allowance. Number 3, they opt out of Social Security for the wrong reasons. The law is very clear. You must be a conscientious objector to receiving Social Security benefits. It does not say that if it doesn't work well for your budget or you just don't like Social Security and you can save more here, you have to clearly sign a statement that you are a conscientious objector to receiving such benefits. Now, if you've already gone down that path, you've already gone down that path. But for those of you who are considering, am I going to opt out of paying Social Security, which is a one-time, irrevocable decision, follow the law closely and make sure you are doing so for the right legal/ethical reasons. Number 4, they don't keep a mileage log. This goes back to number 1. You should be getting automobile reimbursements, and the best way to get automobile reimbursements is just keep a mileage log. And it's basically anything that you do in ministry, visit the hospital, go and visit a shut-in, or go to an event. It's everything but the actual commute to the church, the commute there and the commute back. That's it. You can take, as long as it's ministry related, you can take as a taxable deduction. But you need to keep a mileage log. There's some good digital ones out there. I'm seeing more and more ministers actually prefer going back to the paper. But whatever you decide to do, keep an accurate record. It'll take you 3 to 4 minutes a day, and it will save you a lot of headache in the future. Number 5, another mistake. They don't use a tax accountant or a bookkeeper who understands ministry finance. Look, those in ministry have strange finance laws. There are other types of vocations that do as well. It's not just limited to pastors and other staff, but it's this whole set of rules. And oftentimes you'll run into a bookkeeper or even a CPA, someone who has passed the CPA exam and has gone through all of the certification necessary. Many times you will run into these situations where you'll say, well, that's a housing allowance. I said, well, how does that work? And you begin to find out they really don't know about it. One of the things I had the opportunity to do many years ago was to teach my CPA about ministry finance. And it really helped him a lot because I began to refer to him more and more pastors and others because I knew that he knew ministry finance very well. Don't assume just because someone has done a lot of tax work, bookkeeping work, or accounting work that they understand ministry finance. Ask friends, get references, understand people who know what ministry finance is all about. Number 6 is one that not many people hear about. In fact, if you have a financial advisor, whether it's a certified financial planner, CPA, personal advisor, someone that's just giving you some off-the-cuff advice, you rarely hear number 6. But once you retire, if you're receiving it from an eligible institution, you can take some of your retirement pay as a housing allowance. Now, there are a lot of things that you have to look at. For example, I have my 401k in Guidestone. Guidestone provides retirement income, provides financing, and does health insurance and other things. But Guidestone is an institution for those who are eligible for housing allowance that can actually pay out that 401k when I retire for a housing allowance. So that becomes non-taxable. That could be a huge benefit for us boomers who are on the precipice of retiring, that we can actually take retirement income as housing allowance, at least that part that is eligible, from an eligible institution. You need to find out more about that from the institution to find out if they can provide you housing allowance as part of your retirement income. Okay, 6 major mistakes. 5 plus 1, 6 major mistakes. I did this and realized I needed my other hand on that, and that's why I had to say 5 plus 1. They take advantage of an automobile allowance. Don't do that. They fail to take full advantage of the housing allowance. They opt out of Social Security for the wrong reasons. They don't keep a mileage log. They don't use a tax accountant or a bookkeeper who understands ministry finance. And they fail to take a housing allowance from their retirement funds, such as a 401k or 403b. Okay, you got it? This is pretty fast. A lot of stuff that may just go straight over you. But go back and rewind, look at it again. I guess you don't have to rewind this because this is streaming, it's digital. But go and watch it again, look at it, and then maybe ask people in the know, have you heard about all 6 of these? Once again, I want to thank Tim Songster and Costco at churchdesign.com for being our sponsor on this. Listen, if you have a church building need, if you have a facility, add-on, remodel, or a new building, go to Costco, C-O-S-C-O, and you can reach them at churchdesign.com. Thank you for being here. I'll see you in a couple of weeks as we continue to talk about things that matter at the Rainer Report.